Bitcoin futures have been trading really nicely, really. We saw potential supply from the left here. The market spent time absorbing supply as it entered this zone. It gapped up, spent some time in consolidation mode, drew out supply here on this high volume, came back to consolidate, spent a week in absorption mode here, and then price burst out of this zone and up 1 week's consolidation. It's really accelerated higher this week on good volume, but not really excessive volume. It's above average. It's a bit higher than you might like, but it's not really excessive. In the past, I've actually done a video on this sort of thing in the Bitcoin market. The video was called, "Is this a buying climax?" The bar itself, and this bar as well, looks a bit like a buying climax. The volume suggests that possibly isn't, was modestly above average, not a lot above average. You can see that this bar here, this bar here, this bar here are all higher than this week's volume. So it's probably not a buying climax. I'll go back and there you go. It was that bar. I made a video saying, is that a buying climax? And it proved not to be. If we go forward, you'll see the market spent some time in consolidation mode. So it spent a month consolidating in response to that really strong up bar. Then it pushed higher. Then it consolidated again. Now this time, price really wasn't able to make substantial gains in response. You can see that here was the bar I initially suggested that this was a buying climax. Price just consolidated over a month and then pushed higher. Here was the next higher push. And look how much the thrust has shortened on this next push up to here. Price made all of this ground from the previous push higher, then all of this ground, slightly less, but it was still quite adequate. But the next push higher only had this much ground made. This is shortening of the thrust. This is the buyers becoming weak, a bit of selling pressures coming in, and the market may be starting to unload. Doesn't say it's all over, but it generally means there'll be a pullback in response. So the market tried to go again here, and it failed, and price pulled back, although it did hold on. Then you had a weak attempt to recover. They couldn't make new highs, and prices pushed lower with a increased spread. And they still closed off their previous down bars low, but you can see here the thrust higher has definitely shortened, and price failed here, gapped down, recovered, but it was a weak recovery. The buyers were exhausted, and price has come back. And then in response, price really started to slice lower. And now we're here. So we will almost certainly get consolidation in response here. If momentum is seriously strong, there might be an attempt to push higher, but I don't think it will be broadly supported. We'll see. But generally, when you get a widespread up bar on above average volume, you'll get some attempt to consolidate in response. You saw the last time it happened, it took a month in consolidation before price pushed higher again. We'll see. There may be, this momentum could be really strong, and you may see some attempt to continue higher, but I can't see that spreads will continue to be that wide as price pushes higher. If that's the case, you're going to get a reduced thrust higher in a similar fashion to what you saw last time. The most sustainable response would be a period of consolidation here, preferably within the top half of this bar. So preferably above, say, that level. That would be underlying strength being shown. And then after price consolidates nicely, you might get a push higher there in response. So see what we get. You don't really want to continue higher in a weak way. You either want to see expanding price to the upside on expanding volumes, which then does make you look a little bit vulnerable to a buying climax, or you want to see a period of consolidation here in the top half of this bar to show the real underlying strength of the market.